Hello everyone, it's Khaled. Welcome to today's daily pitch, 13th of March 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Of course, we will start with our economic calendar and see what do we have as a pre-planned economic events for today, and then we will proceed with the charts. We will go over the US equities, oil, gold, and of course the dollar index. Okay, so starting with our economic calendar for today, we had some economic data for the UK. The GDP came out lower than expected at 0% versus the forecast of 0.2%. In addition to that, we had the manufacturing production lower than expected, industrial production lower than expected. So overall, worse than expected economic data for the UK. Moving on during the day, we have the CPI. We had the CPI for France, not very important. And as well, the more important will be the GDP for the US and the PCE, or the inflation data for the US as well. Regarding the PCE, usually I will look at the year over year. The core PCE is expected to increase to 3.1%, while the normal PCE is expected here. Let's move to this one here. Okay, so the PCE price index, this is the monthly, and here the expected at 2.9%. We will see how this inflation data come out and if it will hold some market weight. During last week, the past couple of days, during this week, we had the CPI data. It came out similar as forecast and it didn't hold too much weight. So let's see these numbers. Keep in mind it's Friday, end of the week, so watch out for the volume and volatility. As for the overall market sentiment, the dollar index is still moving up. It's reaching the 100.2. We will discuss this later. The US Treasury yields bounced from the 4%, still pushing up. In general, the yields are moving up due to the increase in oil prices, and in addition to that, this is giving like some pressure on inflation in the US. So we are seeing the dollar index and as well the yields moving up. As for the VIX peaked at 30. We had a slowdown after some comments from the US president that the war is over, and then we can see it moving up once again. So looking at the chart here and regarding the dollar index, we had this previous analysis before. This is a very important area. If we zoom out a little bit, if you remember that it was here, yes, at the 100 to the 100.2. Here it was in August 2025 when we had a lower than expected US non-farm payroll and unemployment rate, and the previous numbers were revised. That's when we saw a strong movement down. Right now, with the current dollar index, dollar strength, and in case we see the PCE numbers higher than expected, I believe if we are able to break above these numbers, above the 100.3, the next target for us could be at these highs at the 101.5 to 101.7. This is a very important number to keep our eyes on. On the other hand, if the numbers came in lower than expected, giving the markets a little bit of relief with regards to inflation, we could be just rejecting this level, and my next target could be these candle lows back to the 99.2 to the 99.5. These are the two scenarios on the dollar index. Currently, what's mainly moving the dollar index is the oil prices. Whenever we are seeing oil prices moving up, dollar is moving up. Why? Because the increase in oil prices means that we have higher inflation, means that the Feds will keep interest rates higher for longer, and this is giving a push for the dollar index. So that's it in general for the dollar index. Let's move on and see what is going on with oil. Of course, oil is being very volatile. What's mainly moving oil is the headlines and economic data, and not much what's mainly moving the oil is the headlines and not the economic data. So this was our previous analysis. We were here, we said if we broke this level, I wanted to see a little bit lower pullback to the 80.2 and then a move up. It dipped to the 81.2 and then we are seeing a move up. Let's delete these and see what are the possible scenarios. For oil, I will be moving to the lower time frame. and marking these levels. The first scenario I would like to see on Brent is the following. In case we are failing to break above the 102.8, just rejecting like this, I would like to see price retesting once again the 95, and reaching the 95, I will monitor the price action. In case I see any rejection at this level and failing to break lower in order to close the gap, the following could take place. Such price movement like this. Scenario number 2, if the geopolitical tensions continues and there is no signs of relief, especially talking about the Strait of Hormuz. In case we broke higher, retested, my next target will be these candle highs at the 109 to the 109.5. And finally, in case we broke higher, my next target will be these candle highs at the 120. Keep in mind, in order to break above here and above here, this should be supported by fundamentals or by the headlines. We are seeing that there is a shortage in oil, there is some geopolitical tensions, Strait of Hormuz is not being resolved. So all of these will be supportive catalyst for oil, and we could see it retesting once again. I will look at the 116 to the 118. These are the scenarios. The final scenario, what if we broke lower? To be honest, if I see price breaking below the 95, retesting these candle lows at the 87, I will look for the following like this. So a couple of areas of interest, keeping in mind that oil is being very volatile, and in like a couple of minutes you can see price moving by 5, 8 or 10%, so watch out for the price action. Moving on to US equities, nothing much to discuss. We had this analysis before on the US 30. We were here, we said that if we reject the 48,100, we could be moving lower, and I wanted to see a break below the 47,500. This is what actually took place. We retested this level, we moved lower, we broke this level, retested, and then moved lower. Right now, the same analysis will continue for me, honestly. I will look for rejection at the 46,500. In case price failed to close lower, we could see a rejection from here and then moving up once again to this target. Okay, this is the first scenario. The second scenario, in case we had candles closing bearish below the 46,300, I believe our next target could be, let's move and zoom out to the 1 hour time frame, are these candle lows at the 45,700 approximately. These are the levels I will be looking on for the US equities. Finally, let's move on to gold. Well, for gold, we had these scenarios. We were here last analysis. We said that in case we retest the 5,230 to 2,050, we could see a rejection. We can see that zooming in, several candles just tweaked up, touched this level and started to move down. The price action on gold is not the best. So these areas that we marked are still holding, I believe. Scenario number 1, I will be looking for right now, in case price reject the 5,020, we could see the following price movement with price that could reject at the 5,190. In case we broke higher, my next area of interest will be here, the 5,240 once again. And in order to see additional bullish momentum, we could see today lower than expected PCE, lower than expected inflation. This will be reflected a weakness on the dollar, and this could be reflected as well strength on gold. In case we are able to break above these candle highs, my next level I will be watching is the 5,320. It's a very important level where you can see it here. Keep in mind that regarding the correlations I'm talking about, on Monday we have a live educational webinar. The educational webinar will be talking about how to assess the impact of any headline or economic data using the intermarket correlation. It's a very important webinar. It will make you trade more clearly, specifically with these during these times and these situations, where every couple of minutes you will have a headline and you would ask yourself, is it just market noise or is it going to have any market impact? So don't forget to register to our webinar. It was mentioned in the Telegram channel. It's a free educational webinar. We will be discussing these topics and you can ask any questions where we will discuss as usual. So back to gold. we had this analysis, we have a break here, and the final scenario, what if the price action goes bearish, we have dollar strength, higher than expected PCE, and we are able to break lower. Breaking below this level, my next area of interest will be down to the 4,860. Yes, reaching this level, I will monitor the price action. For anything doing like this is what I will be focusing on. So in general, couple of areas of interest for gold. Other than that, for me, in the middle of the range, I will be out of it. Okay, guys, so that's it for our analysis for today. Hopefully you enjoyed it, and we will see you soon. Thank you so much for joining.